Strategy, indicators, and market knowledge are overrated. What actually separates the 10% of profitable traders from the 90% who get wrecked again and again is something so simple most traders dismiss it entirely, and that trait is patience. And if you're like most traders, you're terrible at it. Trading is the only profession where doing more destroys your results. In every other career, activity equals reward. Work more hours, close more deals, complete more tasks, you get paid more. But trading flips this logic upside down and crushes those who don't adapt. The most active traders, those who traded the most frequently, averaged annual returns of 11.4%. The least active traders averaged 18.5%. The overtraders weren't just making less money, they were being systematically destroyed by their own activity. The market doesn't compensate you for being busy, it pays you for being right at the right time. The trader taking 50 setups a week often loses money, while the trader taking 5 carefully selected trades builds wealth. This fundamental disconnect between effort and reward breaks most people's brains. Why? Because human psychology craves action. We're hardwired to equate movement with progress, activity with achievement. This isn't a character flaw, it's evolution. Our ancestors who sat still when they should have been hunting or fleeing didn't survive long enough to pass on their genes. We're literally descended from people who couldn't sit still when action was required. But the modern trading environment punishes this ancient wiring. Sitting still feels like surrendering control, but in trading, the need to do something becomes your worst enemy. Your brain, optimized for survival in the African savanna, is catastrophically mismatched for success in global financial markets. Think about it. When was the last time you sat at your charts for 3 hours without clicking buy or sell? When did you last watch a perfect setup form and deliberately wait for better confirmation? Most traders can't handle 20 minutes of inactivity before their fingers start itching for the mouse. That itch is expensive. Every unnecessary click chips away at your account, your confidence, and your future in the markets. The neuroscience of impatient trading. Let me tell you what's happening in your brain when you see a potential trade setup. The moment your eyes spot a pattern, a breakout forming, a support level holding, a moving average crossover, your interior cingulate cortex lights up like a Christmas tree. This is your brain's urgency center, the same region that activates when you're running late for an important meeting. Simultaneously, your nucleus accumbens starts flooding your system with dopamine. This is your reward anticipation center. It's pumping you full of the same chemical that makes gambling, shopping, and social media so addictive. Your brain is literally getting high from the possibility of profit. Here's the kicker. This neurochemical cocktail peaks not when you make money, but when you're about to click the buy button. The anticipation is more intoxicating than the actual reward. This is why traders often feel a strange sense of deflation immediately after entering a trade. The drug hit is over. Reality sets in. Professional traders have learned to recognize these neurochemical signals as warnings, not invitations. When they feel that rush of excitement, that urgent need to act, they step back. They've trained themselves to associate the urge to trade with danger, not opportunity. The dopamine trap, why your brain betrays you. Here's something they don't teach in trading courses. Your brain is working against you every second the markets are open. Dopamine, the neurotransmitter responsible for motivation and pleasure-seeking, operates on what scientists call a prediction error system. When reality exceeds expectation, you get a dopamine hit. When reality falls short, you experience withdrawal. In trading, this creates a vicious cycle. You see a setup, your brain anticipates profit, dopamine spike. You enter the trade, brief satisfaction, then reality sets in, dopamine crash. Whether the trade wins or loses, that neurochemical high is over. Your brain immediately starts scanning for the next potential hit. This is why successful trades can be just as dangerous as losing ones. The dopamine system doesn't care about your P&L. It cares about novelty and anticipation. The trader who just banked a 3-year winner often feels an irresistible urge to find the next setup immediately, even if no quality setup exists. The goal isn't to make good outcomes happen. It's to make good decisions regardless of outcomes.